Hello everyone, Dividend Enjoyer here, and today I'm going to be doing a stock analysis video on Meta Platforms Inc., ticker symbol META. I've owned this stock in my own personal portfolio, and I've gone all the way up to about $750 a share with an average cost of around $620, I think, around there. And now the stock's trading for $582. I haven't sold that entire time, and I don't plan to sell. And I think that it's actually one of the best buys that are out there, in my opinion. Now, keep in mind, this is not financial advice. I'm not a financial advisor. And I do think that there are some differences in a stock like Amazon versus Meta, simply because I think that Amazon has something more tangible and people are more likely to give up their social media than they are to give up their Facebook or their Instagram or any of their social medias. But I do think that this is a very important company and it has a monopoly on social media, which is something that we all use. And I just see the efficiencies getting better. I think that they're going to come out with either a great new product in the future or a way to boost their ad revenue in terms of using AI. I also think that this stock is very well positioned for AI data training simply because they have so much information on all of us that we've agreed in their terms of service to let them train their models with. I think that this stock is really being undervalued for what it is. I think that it's talked about as, a Mag 7 stock, a big stock, but I really think that this stock is, for one, I think it's more valuable than a company like Tesla, obviously. I think it's debatable if it's more valuable than a company like Apple. I think it's very well positioned because there aren't a lot of alternatives to the sites that they own. And when there is an alternative, they usually try to buy it out. And I think that they have the best understanding of social media and navigating the political environment that entails more than pretty much any other social media company. I think that Mark Zuckerberg is an amazing CEO in terms of what he does for shareholders. And the company looks very cheap if you look at the historical revenue growth and the current cash flows that it's producing. I also think that this is a stock that I'm really going to have to consider adding more of to my own personal portfolio. I've already added more Salesforce, American Express, and Amazon. And I kind of debate this one in Amazon simply because I got into both of them with around the same amount at the same time. But I really kind of prefer Amazon just for the logistical side. But I think that Meta is trading a lot cheaper, so I think the potential growth is a lot higher. But I also think that it's a little bit riskier because Amazon can always fall back on the logistical network that it has as a cash cow and then invest in a lot of different risky things. However, Meta is kind of different because I feel like Amazon's almost a necessity for a lot of people in their lives right now, whereas I feel like social media is not necessarily a necessity, even though people spend a lot of time there. Again, Meta's either going to discover something new that's going to make them a lot more money, or there's going to be AI that's able to tailor ads even better than they're already tailoring them to the consumer, which is going to greatly benefit Meta Platforms overall. Those are my two kind of bull thesis cases for this, and I just think it's trading undervalued even if it doesn't have those sorts of things going on. If we look at the stock is up 17.18% over the past year. It has a market cap of 1.47 trillion, a price to earnings ratio of 24.13, which is pretty favorable when you look at some of the other tech stocks. Obviously, it's fallen pretty considerably from its high. It has a current annual dividend yield of 0.36%, a 52-week low of $414.50, and a 52-week high of $740.89. So you're kind of getting an in-between number between the 52-week low and the 52-week high. I think that it's always smart to buy something riskier like this when you can get it at a better price. So if I have the money and Meta's still trading at this low price, I'm probably going to add one more share. I currently have two. And if we look at analyst ratings, the vast majority of them are rating it either a buy or a strong buy, meaning that analysts think that this stock is probably going to perform well into the future. We have analyst price targets ranging all the way between $505 to $935, which is a pretty far disparity, but that's pretty common when you see so many analysts having a rating on it. The average analyst rating, though, is $765.07, so they're expecting it to be around there on average in 1 year's time. And now that we kind of got all of that out of the way, I think we can move on to the DCF model valuation portion of the video. Looking here at the weighted average cost of capital for Meta, I calculated a weighted average cost of capital of 7.41%. This is obviously going to be very close to the cost of equity of 7.617% because their current weighting is 96.78% equity weighted, and it's only 3.22% debt weighted. So it's really nice when you have a company that doesn't have a lot of debt on the balance sheet, in my opinion. I know that you can get the tax shields and things like that, but personally, I don't like companies that have a lot of debt because it's harder for them to weather storms or bad periods. I also want to show the DCF model valuation because this is really where my thesis kind of comes in too, because I think you're getting kind of the best of both worlds with this stock. You're getting a very, very strong company, very monopolistic type of company with amazing products that nobody else has, and you're getting it at a pretty cheap price relative to its past performance. So if we look here, we have an average revenue growth since 2021 of 12.17% annually. This is pretty in line from 2022 to 2023, and from 2023 to 2024, we can see that there was pretty much the same revenue, down 1.12% from 2021 to 2022. And then we can also see that the free cash flow growth rate was 33.54%. But this has some extreme outliers, so I'm guessing that they're repurchasing capital stock, or they're having crazy CapEx spending that they're having in AI, which I think is going to be very positive for them in the long term if you are a long-term investor. I've tried to kind of find the middle ground for Meta, and we could see here, if we go in between those, if we have a 6.5% growth on average over the next 9 years of the free cash flow, then the stock is trading at about a fair price right now. Now, if we use that revenue, the average revenue growth of 12.17%, we can see that according to my model, the stock has 48.35% upside from where it's trading at now. And this is the historical amount that they've been able to grow the revenue in the past. I think that as they get more mature, that number is going to lower. So I would price in closer to something like 8% just to be very conservative. And you're still getting 10.64% upside, meaning that the fair value would be around $644.31. From a DCF model standpoint, this is very good on paper just from the financials, but if you really think about what the company is, I would want to own Meta, and that's why I own Meta, because it's very monopolistic. Nobody else does what they do, and they're very profitable. They're just printing money. They're able to influence politicians. They're able to pretty much get what they want. They're in every country. It's not a seasonal product. It's something that people use every single day for more and more time, and they're figuring out ways to get people to stay on their platforms for longer, whether that's the algorithms that they're using or the different types of data science that they're employing to keep people there. Now, if we go in, and I do not expect this to be the case, but just for funsies, we can do the average free cash flow growth rate of 33.54%. And if we do that, we can see that they have a DCF of $3,619 per share. If this happened, that would be absolutely insane. I don't expect this to be the average growth rate over 9 years at all. I think, again, it's going to be close to 8 to 11%. And 11%, again, is very liberal. That would place it at a value of around $795.90. But we can kind of see here that even if we go down to 7%, which is almost double their average revenue growth a year, there's still upside to this stock at where it's trading at now. So I don't really think that it makes sense that this stock is trading as low as it is for as high quality as it is. And if you go back in the video, you can see that the analysts would have to agree with me. They see that the stock is probably oversold at this moment and that it's a very high quality stock with good earnings, because initially I was pretty skeptical of Meta because I thought it didn't make sense. The cash flows weren't there, and it was more just big because it was a product that people use every day. So it was one of those things where I was initially very skeptical of ever buying Meta just because I felt like the cash flow wouldn't be there or anything like that, but that's just not the case. The cash flow is very strong in this company. The revenue is extremely strong in this company, and it continues to get better pretty much every year with the exception of 2022, which might make more sense because 2021 was a COVID year. So I think COVID maybe accelerated these types of companies. And I think that a lot of the skeptics will also say that it doesn't make sense for them to invest so much in CapEx. And here's kind of the counter argument to that. At least I'll play devil's advocate for that argument. Meta needs to invent the next new social media that's going to replace Meta or Facebook or any of their products. And the reason is if they invent it, then someone else won't invent it and destroy their market cap. So they're constantly trying to innovate to invent something that is going to make their other products irrelevant in a lot of ways, instead of just resting on their laurels and collecting the money and waiting around to be out innovated. They're constantly spending money innovating, trying to figure out new products that seem wacky and far out, and sometimes they hit some home runs, right? They're really just trying to innovate constantly because if they can figure out the product that's going to replace their current social medias, then it's a lot better than someone else making that product. Now, I do think that they did miss with TikTok. I think that's something that they definitely could have made, or they could have bought Vine or what have you. I think that that's part of the scrutiny that's coming onto TikTok is actually Meta going after them through lobbying and different things like that. Because that is taking some market share from them. But if you look at every other demographic that uses social media, Meta pretty much has a stranglehold on them, and they have so much information on all of these demographics that they can either sell using their AI data training or advertise better. Or like advertise better things to and figure out how they can charge more for those ads. So I think that with these cash flows and with Meta's past performance and with the type of business that it is, I think that Meta is extremely strong right now. And once I have more money in my account, I'm going to be investing more into Meta into the future, as long as it stays at this good of a price. Let me know what you guys think. I think that this is one of the best stocks that I've reviewed, and I think it's important to look at a lot of tech stocks right now because I think that that's where you're going to be able to stretch your dollar further into the future when it comes to future returns and things like that, because a lot of people are jumping out of tech stocks that traded for such high premiums that you could never get these kind of prices with previously, and I think that it's a mistake. I think that they're oversold as a sector, and that's where I'm investing my money. Like I said, Salesforce, Amazon, and American Express have been the three stocks that I've put a decent amount of money into, and I think that they're going to continue to perform into the future very well, even if we have a recession. So if you've made it this far, please leave a comment down below. Let me know what you think about Meta platforms. Let me know what you think about the video, if you thought it was a good video, bad video. Please hit the subscribe button if you made it this far. It helps the channel out a ton, and leave a like or dislike. Thank you for watching. Have a great day. Bye.